Dinesh Kandanchatha, Chairman and Interim CEO of Windfall Geotek. And what we do is we are in the digital exploration space. We use artificial learning and artificial intelligence and machine learning through data models to try to sift through public and private data to identify potential targets for base metals, copper, zinc, nickel, lithium, cobalt, and precious metals. And we've been doing that since 2005, and we're getting close to 100 discoveries. 100 projects that we've done, and well over 30 discoveries, many of which we've participated in equity level. So our business model is of equity participation, and we are partnered with our clients to see the results as opposed to a more traditional services model.
Dinesh, good to see you. We saw you back in May this year. Enjoyed the conversation then, because it's an interesting model. It's a complicated one. There's a lot of moving parts, right? So I think a phrase you used last time that people may understand a little bit better is project generator in the mining context. You've come on board recently. You talked about 2005, but you've not been on board that long, right? You've been a couple of years here. So there's the old bit, which I'm going to separate out in terms of some skill bases there, and then what you're bringing in, which is the technology piece, which I quite liked. We talked about AI and data learning and digital learning to aid miners. You've used phrases like zero carbon and reducing costs, et cetera, et cetera. You kind of came in with a bit of a whirlwind. Market got excited, and it's come way off. It's come way off since the beginning of the year. What do you put that down to? People just not getting what you guys are doing?
I think the model is complex for investors to understand, and so that's on us as a business to try to clarify it and simplify it. And so we continue to try to do that, and this forum is one of those ways. I'm hopefully going to be able to do so. The essence of the business model is around asset creation, right? And we want to be a business whose value is tied to the assets that we have, and the assets are digital assets in the form of our technology, and assets in terms of marketable securities that we take in our customers, and then royalties that we get in projects that we generate. That's a lot of moving parts, as you've rightly said. And so when you're trying to figure out as a retail investor how I value this business, and it's challenging, and it requires maybe a level of math and sophistication that most of us don't enjoy getting into. So that's where I think we're at least in our investor relations, we've got to do a better job. I'm always available to any investor. Doesn't matter if you own 1 share or 1 million shares. Just you can get a hold of me through our investor channel, and I'm happy to talk through the model with you. The net of it is that the model is complex because it's a complex market, and it's difficult to make money as a technology company in mining. You can make money, but you can't create long-term shareholder value. You can't create the multiples that justify investors allocating their capital to you if you're just charging for services. So as an investor, it was my responsibility to try to find the leverage in the model, and that's what we've tried to do.
So let's explain. So let's make it even simpler. Okay, let's make it simple. My 12-year-old kid can understand this. Okay, the old way was companies would take data, they'd give it to their VP of exploration, he'd look at it and go, well, I think we should go and target over there, over here. It kind of looks interesting to me. You're saying you can process data much more quickly, in a much more sophisticated way, put layers of data on top of each other, and hopefully I think the idea is be much more sure of the targets that you're going for. Less drilling required, less drilling and required.
Less money.
Right?
That's correct. Less drilling, less money, less environmental impact because you're drilling less holes. And we have such a level of confidence that we participate with you on an equity basis on that drilling program.
And what does that mean? Hang on. So it means you don't take a fee for it. You'll take shares, or you'll take a fee, but you will buy shares with it. I mean, what do you mean by equity?
So there's a combination. One thing we all know is when you get something for free, you don't tend to value it the same way as if you have to, put up something for it. So, our interests are to align our business with our client's business. So there's, three parts to the model. There is a fee. The fee is necessary because it requires, there's a cost of time. And we definitely want to ensure that our clients are as invested as we are in this work. There's equity. So sometimes that takes the form of a check swap where they would pay for the fees and we would put all that money right back into the business. And in those, we're very careful about those projects because those projects, we have to see the returns for our shareholders if we decide to do that. There's a royalty in the case where, in all cases where we do work. And more often than not, when we're working with customers that are, are well capitalized. For example, when working with larger, what would be called seniors or majors, they're more interested in us from a understanding our model perspective, and they're interested in multi-year contracts. So that's, if I were to break it down, where there's a fee, we want to work with you for a long period. So we're looking to sign a multi-year contract with you, which would typically be 4 years, 3 to 4 years. Going through one drill season does not a resource make. So therefore, we need to work with you over multiple seasons in order to be able to drive the value for the resource. In the case where you don't have the capital to be able to support that, we recognize that if we are able to help you get to your next funding milestone by providing you high quality targets that are capitally efficient, you're going to get to that milestone and come back to us to help refine. So in those cases, we tend to take equity because that's the highest leverage for our shareholders, and an NSR because we have the ability now to do these projects at a very rapid pace. One of the hacks to the business model we realized was if you could do this quickly and cheaply, if you could leverage the power of cloud computing, you could democratize in many ways this kind of service, which means you could do lots more projects at functionally the same cost. And so a big part of our investment and our ability to have the flexibility in the model is due to our investments in technology and our investments in data acquisition and data engineering technology using cloud services that allows us to work at a much greater pace. To give you some sense, our technological advancements, when I joined the firm 2 years ago, it was taking roughly 18 weeks to do a project. Our target now is within 1 week. So, and we're very, very close. So our view is as we shrink the time from data to target down to days, we're going to be able to bring a ton of value to the marketplace, to VPs of exploration, all throughout the primary exploration segment.
The stuff that you're talking about is quite frankly, and I don't mean this in a derogatory way, is your internal admin process. You've got to increase your processing capability. You've got to reduce the time it takes you to do a project. You've got to reduce your costs. So that's a benefit to you straight away, which eventually can be passed on to a customer. I think, which is great. It's all good, but I just want to keep it simple for people. Not everyone's used to the language that you're used to, right? So the bit that they do understand is money in, right? So contracts and agreements signed, okay? That takes a little bit longer because in the same way that you want multi-year contracts, if people are going to sign multi-year contracts, they want to test the goods here. They want to taste test.
Got it.
Right? And that's going to take a little bit of time. So there's a kind of ramp up component to this for you. So we only spoke 6 months ago. I don't expect you to have changed the world since then, but I do want to understand what have you learned from then to now about the way that you onboard clients?
Great question. So, it starts out by having a great machine. And, we had a phenomenal algorithm, but we didn't have the ability, even if the market was ready to give us 2 contracts a month, we didn't have the ability to service them, not with that kind of timeline. So, before you go out and burn bridges and reputation by trying to close a whole bunch of contracts, you better make darn sure that you're able to deliver on them. And so that's where we started. And so that's what most of the time over the summer, and how a big part of how we did that is we went out and we started processing public data and looking at all the different iterations and versions and challenges around working with public data. As any of your many viewers who are geologists and VPs of exploration know, it's not like this stuff is just sitting in nice formats that you can just, hop off to the library and pick up, right? Like it's challenging in and of itself. Now, the next major business hurdle we have is how do you create a engagement model at the commercial level, i.e. with customers, that they can do business, transact with you quickly. That's been challenging. Why? Because there are a lot of contracts around mining. A royalty contract can be hundreds of pages, hundreds. And there's a lawyer on Windfall side and there's a lawyer on the customer side that want to go through every single word in those contracts. And so, even when you get to commercial terms with the business side, which is non-trivial because they have to trust that you're going to do the work, they have to trust your technology, they want to see examples, they want to dive in, and they want to actually have you play with their data and show them that there's something there. So that brings with it its own commercial challenges. Then you have the legal as well. And so we're looking now at we can solve for the commercial side. We're working hard with our partners, primarily investment banks, to be able to try to accelerate the commercial side of the equation. Because if you can get money to say, let's go, then the CEO and the VP of exploration will say, well, if they're paying for it, I think I'm okay with it, provided we can do something that's reasonable for my shareholders. So I think we're making good progress on that side. The legal side is the one where, to date, that's been our biggest challenge. And it really is about the fact that these contracts live for 20 years. When you talk about a NSR on a gold property, you may start collecting that, 7-8 years from now, right? And there's lots of company iterations. It might get passed on. So your contract has to account for all of that. Otherwise, that hard work that you did will not be accretive to your shareholders because nobody will be able to enforce the contract. So those are the kind of the block and tackling kind of things that we've been working on to try to get to the point where, we could do multiple deals a month. Right now, those commercial terms, the other option, sign bad deals. We're just not willing to do that. Like, we're just not willing to take on business that isn't going to be accretive long-term to the...
Okay, so help me with this then. So it sounds like a pay-to-play initially. You've got to spend some money or raise some money to spend some money to prove on the commercial side what you're saying. Then you're going to need some time to deliver the things that you say you're going to in terms of I guess there's going to be smaller deliverables initially, and as you achieve each one, it kind of ramps up a bit. So there's a cost component now to your share, you as a company, and therefore shareholders will see that. It'll take a little bit more time, but I think you said that from the get-go. This is a get-rich slow scheme in the sense of where the reward comes from, or rather the returns come from. So that's fine. So what is that amount of money that you think you're going to need? Because if you get enough of these things going and you can show that you're signing contracts, I think people get interested. Other people start looking in, and word of mouth and all of that good stuff. So how much money and how much time do you need to get the commercial side of things going?
You ask great questions. So let me answer it this way. I don't think we need any more capital. I'm an old school business guy. You try to make money from day one. So whatever you do, you don't rely on outside capital unless you absolutely have to. Outside capital is expensive to existing shareholders. It always is. It results in dilution. And I always think as a shareholder first. So, what is our structure? Well, we have our long-term bets, which are our NSRs. We have our short-term immediate term services contracts, which give us immediate cash to fund operations. And then we have our marketable securities, which allow us, as the projects we've done over the course of the year either go public or accrete in value as a result of our drill targets, that's money in the bank for us. So what we're looking to do right now is we're looking to just get to a place where we have roughly 15 projects that we've ourselves are starting to put together that are related to public data that we've processed. The Chape project was one of the early ones. We have just announced, we did a deal with Grand Pacific Resources that offered us a 10% stake in the business, a 1% NSR with a 1% buyback, and also the professional fees associated with that. We just announced in early summer, in June 23, the Dios project, which is now currently drilling. And that was a great example of our value proposition in action. That property, that K2 property, was 150,000 square kilometers. 150,000 square kilometers. Our targets were 87.87, a target area that covered 0.87 square kilometers. So just think about the return on capital that we could provide targets of that level of specificity. They're currently in drilling right now, and our hope is that we'll be able to see something soon from that. We have equity in that position, in that company as well. So as these businesses drill our targets, get the validation, and see the appreciation in their companies, it's an opportunity for us to take some of that house money and reinvest it in those projects moving forward. So, we really believe we built a machine that allows us to self-fund the ongoing technical advancement while building that long-term asset value of the projects we're involved in. So time is the thing that we don't have, but we do have capital. I mean, we know the market we're in. Everybody wants something yesterday. And so that's where we're really focused in, is around time.
Well, I guess that's part of your story, is to just keep reminding people that this is, you're trying to do something new here in the way that you're approaching it. I guess part of the problem for you is there's a lot of companies throwing the word AI around, right? Like they're going to solve everyone's problems with AI. And the take-up has not been big so far because people need to, it's a slow process. So you get kind of tainted along with, not tainted, you get thrown in in the basket with everyone else there. What do you think, again, coming back to what you've learned, and you mentioned there hacks and, effective shortcuts, and, if you're in the software tech space, you talk about being efficient. And forget the contracts, forget the commercial, forget the legal. What are the hacks, shortcuts that you think you're going to need to do to actually win in this space? Because if everyone's saying the same thing, that's going to be problematic for you.
No, absolutely. It's hard to differentiate yourself. So these problems are thorny, and but what I've discovered in doing this for many years as a technology entrepreneur is reduce friction. So why do people doubt technology? Well, the one is it's difficult to use, and so therefore it takes a lot of energy for me to figure out how to use something. Why was the Apple phone so successful, right? It wasn't. Why was the iPad so successful? iPad came 7 years after the first tablet was first released to the marketplace. Yet nobody thinks about a tablet other than an iPad. Everybody copied them afterwards. Why? They reduced the friction. They made it easy for people to use. So that's a big part of our strategy, and that will be a big part of our strategy moving forward. So if you can reduce friction, you're going to make it easy for the geologists and the VPs of exploration to begin to engage with the technology. So a big part of our technology roadmap, now that we've built, we have a very strong algorithm that has been proven. We have solved the data acquisition challenge that allows us to, incorporate and do projects quickly. How do we make it iPad easy for a geologist to engage with us at a technical level? And that means, how do we make it easy for them to have tools to go and test the tool, play with it, without having to engage in a contract? How do they get access to, how can we leverage public data, put it in a way that they can use it to supplement? How do we enter into things like data processing agreements with them that allow us to work with them without them having to commit to capital and all those contracts and stuff like that? So we are starting to look at that as the next phase of adoption, because we believe that when we make it easy, the industry's smart. If it's easy, they'll look at it. If it's explainable, they'll believe in it and have confidence in it. And so that's the last part of our strategy, is to take all this mumbo jumbo, which is AI, machine learning, and make it explainable at a technical level to the geo professionals that are involved in primary exploration. So how do you build explainability in? That's the last part of our strategy. Again, Simran is leading these initiatives. He knows this stuff really, really well, way better than I do. And what he's trying to do is he's really tugging at the core problems of AI in mining. And when we solve for those, I believe that the market will adopt it. The market is adopting it because they don't understand it and they don't believe in it. If you can make it easy and you can make it understandable, any smart person will pick the best possible tools so that they can be successful.
Okay. Well, look, I guess once you're able to start helping people visualize that, by showing people what that could look like, is basic interface between what you sell.
And you've hit it. It's an interface. It's a web interface that allows you to upload your data, that allows you to run simulations, and leverages all of our backend data engineering capabilities and our algorithmic capabilities.
Right, which is why I referred earlier to some of the things you were talking about as admin. It's like it's irrelevant to the end user, right? What they want to know is they're going to get the answer that they want in the most efficient way possible at a price which you guys have predetermined as fair. And at that point, it becomes very important for your shareholders, which is understanding how you get remunerated in a meaningful way. Not the software as a service kind of component to this, if you go down that route, or the service fees, but because if you look at exploration companies, not that many get into production, right?
Yep.
That's nothing's changed there.
It's a 1% problem,
right?
Really,
it's a 1% problem.
Literally.
So you need to be able to demonstrate again. So a bunch of things that you need to be able to demonstrate is that you have solved the 1% problem here, which is you are more likely to see where others fail. And you're going to be, again, more efficient in identifying where people, who you decide to partner with, or who you wanted to partner with. Get a deal done where, yes, you pick up some fees to cover, today's costs, but the big reward at the end of this are the kind of returns that you're looking for on whether it be the NSRs or the equity, et cetera, et cetera. Otherwise, it's just a service business, in which case.
Exactly right. You've hit it. And so, so how we think about it from a business perspective, if it's a 1% problem and you could make it 2% successful, you've doubled the market, right? That's the nice thing about a small base. So how do you make 1%, 2%? Well, there's three variables that make a project go successful. One is the project itself, i.e. is there ore in the ground that is extractable?
Well, economic. Right? Extractable is one thing, economic's another.
Economically extractable, right? Number two is, do you have a management team that can execute on making that happen, raise capital and all of those parts of it, right? And then, the third one is, can you do it in a meaningful time frame with where the macro factors are going to affect it positively. So, one of the reasons we're very focused on base metals is because there's a macro trend that's going to move the economic variables up, right? We need tens of millions of batteries over the course of the next 10 years. That's going to change the economic formula for those ore related to those end products. So what is not economical today will become economical in the future because of that macro trend. So those are the variables we look at, and in the short term, how can you conserve capital until those economic realities can be realized? Well, it helps if you only have to drill a 1 square kilometer target area instead of 100,000 square kilometer target area. That's a good way to be economical with limited capital. So that's what we hope our customers come to us with is, look, before I start drilling, I have so much money. Can you help me pick? And I'm not asking them to show me what they have. I'm saying, you just let us go develop our targets. You keep yours in your back pocket, and let's look over. Let's do this with them. And where we both think there's something, why not go there first? If you have 25 targets that you want to go drill, let's drill the first 5 that we both agree there's something there. And if you find something, well, now at least you've upped your chances. And getting more companies to that next phase is how you go from that 1% to the 2% at every phase of primary exploration.
Okay, so now we're getting into a couple of things there. One is you're saying at the right price, anything can become economic, right?
Yeah, so, within reason, right? Yeah, within reason.
Within reason, right? Okay. So there's that, and if you pick the right thematic, yeah, obviously battery metals is hot at the moment. So that would seem sensible. But you're also now straying into some areas which the data isn't there to support it. You are going to need support from other people to try and understand which companies, which management teams from which companies are going to be able to do a good enough job. Because there's good management teams, not so good management teams. And even a bad management team can screw up a good project, right? And that's long established. Right. So, who are the people that you brought in? Because it was I think a couple of you we talked about last time. But have you brought any advisors in, industry guys who can actually help you determine who you should be partnering with? Because you can waste a lot of time and money and effort on your part by
so we've kind of outsourced it in good technology fashion. We've outsourced it to the bankers because they've been evaluating management team for years, right? And so one of the things that we've worked hard on is we've worked hard on a partnership with investment groups to help us shorten the list, right? And then we have our own internal team. We have folks who have worked with Windfall and past customers, the network, that help us kind of play the odds. But at the end of the day, we are very, very focused on the numbers game. We want to try to get as many, that's the whole purpose of technology, is to try to get as many projects in as we can, and with a net cost per project at the lowest possible, so that we can be involved in as much as we can.
Yeah. Okay. So as an ex-banker, so I'm saying there's the nicest possible way. There's some good guys and there's some not so good guys. All right. So
fair enough.
Their advice is going to be variable depending on who you pick to advise you. So there's a little bit of that. And I'm just wondering, again, coming back to what you've learned, you've come into a space which is new to you. You've overlaid it with what you do know. And there's lots and lots of learnings we talked about today. But in terms of people that you're meeting, bankers, if you said to me, I'm going to rely on the bankers, I would probably grimace a little bit, if I'm honest.
So, I think you just did.
Yeah, off screen, because it's.
So let me qualify it a little bit, right? So this is in mathematics we call this a multivariate problem, and you can't optimize for all variables. So what do you want to try to do in this case, right? So there's 3 or 4 possible ways of solving for this. One is that you solve for it by hiring a bunch of very high-priced, experienced mining executives who would be able to come into the business and maybe offer you either from an advisory perspective, board perspective, management perspective. That's one option. It's a great option if you have a lot of capital. We don't have a lot of capital, so therefore that's not a great option for us. Second option is you go and you start building a network through your clients, and you start watching people who succeed and people who fail. And what I've learned is that people who succeed tend to like to associate with people who succeed. People who fail tend to all run through their friends and find new friends, right? So that's kind of the second vector. That's a lot more achievable for us. And then the third is that you try to identify people whose interests, where incentives go, outcomes go. And so if the banker's incentive is tied to ours, so for an example, like say we're doing due diligence on a project that a investment bank is already investing in, our interests are aligned. And so if the remaining challenge of that project in terms of funding that project is that we aren't sure if the resource is going to make sense or be economic in the investment window, we have an aligned. That we can answer at Windfall. Is it a great management team? Well, that's very difficult. The banker has to answer that question well before they answer the question on the resource, because like you said, a poor management team can destroy a great resource. So there's a lot of art involved. There's a lot of conversations, which kind of speaks to why it's slow, right? And why it takes time. So these are all things that we're learning. And one thing I've told our investors see a lot of companies. They vote with their paychecks and their checkbooks every single day. So I always ask them, when you're voting, if you see companies that you think I really like, send them to us. Let us engage in a conversation. We have a business model that allows us to engage in a lot of conversations and select the ones that are going to make the most sense for the business.
Okay, you and I should have a chat off screen about bankers.
No bias, right?
No, I've seen both sides of it, right?
Yeah.
Having been one, and
It's just,
how people get
Michael,
remunerated. How
honestly, it's super tough to, you spoke to it right at the beginning, right? It's very hard to be build credibility in this business if you aren't known in the business. And so how do you get people to refer you and talk to you? Well, you need to start from somewhere, and capital, it speaks very loudly in this industry. And if you can start with capital, you have a much higher percentage chance of having a follow-on conversation.
but for you and your shareholders, the entire gamut of your share registry, they want you to start doing deals which are meaningful, and you're going to need to be clear to say the payback for this is whatever period of time it is. We're going to do a whole bunch of these. It's the smart way to go. We will create scale, and there will be a tipping point where this thing really starts to move. But between now and then, bear with us, because this is a new and unusual strategy. Not unusual, that's fair. It's a new strategy which will pay dividends. But right now, you kind of need a massive work, quite frankly, for people to look at and go, oh, this is starting to be something.
It's starting to pay off. I mean, it's a new business model, right? And we basically changed over our management team in March of this year. So, we're still very much in the early days of a organizational transformation, and that transformation requires rebranding what the market sees our value as, not just the investor market, but our clients as well, because we are historically a services company. So that's one. Rebuilding a team in Toronto that is able to bring that technology excellence to the table, and that's been a big part of it. And then filling out our management team with the right people. Like, you don't bring a CEO or a CFO or a VP of exploration. These roles are not roles that you hire for 6 months or a year. These are roles that you have to have confidence are going to be able to drive, are going to be sticky, and are going to be, a good cultural fit. And so, I'm a patient guy, and that's how I built my wealth, is by being patient and making the right decisions. And what I can commit to our shareholders is we're going to do deals. Every single deal will be accretive to the business, and we're going to do everything in our power not to create further dilution for our current shareholder base.
Okay, but talk to me about the hopper, right? So talk to me about that hopper that you've filled. How many we've seen the press releases about deals that have been done. It's hard for people to quantify. You said it yourself. It's going to take time for that to come to some sort of fruition at some point down the line. You're covering your costs for now. I get it, but even so, covering costs is whatever you are.
It's kind of table stakes, right?
It's not but even for a 16, I don't know, 20 million depending on the day of the week dollar company, that's not enough. So how many conversations are going on in the background which may make it up the other side of that hopper?
Yeah, so our current pipeline is over 40 opportunities. So we have, and they are with seniors, i.e. some of the biggest companies in the world, and early stage companies that don't have a project yet. That's one of the unique things that we have, is that we can generate projects for capital pools. And there are some over the course of the last year, there's been a bunch of deals that have been done that have, allowed some entrepreneurs to now have capital, but they don't have a project. And so if I have capital, I've just done an exit, and I'm thinking about my next project, how do I go about deciding what that next project is going to be? One of the ways that thought process is starting is by calling Windfall and saying, so we're looking at this geographical area. Have you done any work in that area? And if I were to supplement data that you have from the public domain with stuff that I have, could we maybe put a project together? And so, when you drive your costs down, you have the ability to engage in those conversations. So, the pipeline is full. Our rate determining step is the contracts. Like, you're negotiating 10% of a company in some cases, right? Like, people don't wake up one morning and say, yeah, I'm going to give you 10% of my company, right? It isn't done. So there's a lot of relationship building, and then there is the parameters of those contracts and demonstrating that we can bring enough value to earn that kind of stake in these businesses. we have two projects that we licensed last year that are going public next year. So there is an immediate potential for validation of our business model.
In what way?
So
Why do you say that? Validation in what? They've gone public, so what?
Well, because we participate in those transactions at private placement pricing as accredited investors.
But how does that validate you? How does that validate your company?
Two areas. One is we were able to provide them targets. And so, in order to go public, you have to have a bona fide entity with a 43-101 and the potential for a resource. So we passed the due diligence of the exchange to go public. That's number one. Number two is we are actually going to help them raise capital because of Windfall. They were able to provide information to other investors to say, this is the justification for us going and working and developing this resource. So Windfall becomes one of those tools that that entrepreneurs can use, the prospectors can use to help build confidence in their project. Still very early days. We've only done it once, right? But you got to do it once, and then you do it twice, and then you do it 10 times, and then it's a standard. So that's the path we're on.
Okay. I just want, because you've been really straight with me, and I just think we've got to use the right words here. Validation comes in many forms. I can go and get a 43-101 done, chuck 50 grand at someone. I'm off and running, and set up a company's easy. There's lots of listening. I'm interested. I'm keen that people understand what you're capable of doing for a company, right? Genuinely able to do for a company, which adds value, which means that at some point there is some meaningful value for you and your shareholders further down the line. So that's why I'm a bit intrigued to come back on, tell us how you're getting on. It's 6 months since we last spoke. Maybe come back.
Yeah, it'll be perfect. We'll come up. We'll be able to come back to you with actual with the business model fully validated from a project that we generated from public domain information through roll into a private co, through RTO into public markets, and then trading in public markets. And to me, the demonstration of that life cycle is the greatest testament to the value that the business can bring.